What is going on, everybody? Welcome back to another video here on the channel. For today's video, I'm back with another stock talk video. And for today's stock talk video, we're going to be talking about the stock Apple and why Apple fell on earnings. And for today's video, it's going to be an uncut video, so I'm just going to be going through and talking with you guys about the stock Apple and why the stock, fell on earnings. Apple stock tends to fall on earnings, but we're going to be discussing the reasons as to why they fell, especially on this blowout of an earnings, okay? So let's just jump into it real quick and check out the past 180 days of Apple. And as you can see here, here's our first problem, okay? And it's really the real basis of this whole entire video, but I'm going to be going in depth as to some of the other reasons why. But here it is right here. The stock has been on a rampage. The stock in the past basically month alone, from June until the end of July, has been on a surge to the upside, jumping from $123 all the way up to hitting highs, all-time highs at $150. That is the reason as to why the stock did not perform as well to earnings. Earnings, huge blowout. It was amazing, and they did really, really well, especially over in the Chinese market, which right now is a little sketchy, but they still did very well in sales over there. But the stock fell because of the fact that there was so much hype and anticipation. Even though there was still great earnings, the stock itself didn't perform well because of that. And as you can see here, if we zoom on in, and you know what? I'll even change it to the 1 day at 1 minute chart to really give you guys a breakdown of how the candlesticks looked. And you know what? There was a lot of anticipation up to the earnings because we have a lot of earnings this evening right here. That was with Microsoft, Google, and a bunch of other bigger tech names that reported, as well as Starbucks and some other names. But Apple especially had a lot of hype and anticipation leading up into this, and the stock quickly jumped up. You can see a couple candles here did jump up to this 149 area, but as soon as they reported earnings, the stock didn't do a whole lot. It was right around one of these candles right here, around 420, 430, where they reported their actual earnings. Blowout earnings, like I said, the stock was very, very volatile and then just completely dropped to the downside, hitting lows around $142. After hours and even in the pre-market this morning, there wasn't a whole lot going for it. And today, the NASDAQ did drop right at open, but then bounced back, and it was a nice clean run on a lot of our bigger tech names and just tech stocks in general. But the real reason, and you can play this and you can use this answer to a lot of your questions as to why stocks may fall due to earnings. You gotta look at the past at least 20 days leading up to those earnings. And as you can see here, Apple is a clear sign of the reason as to why the stock did not surge after they had a blowout earnings. The stock has already been anticipated, already been running up so much that because of that, even with good earnings, a stock can fall. And that's why playing earnings is almost like a gamble in certain situations. Now, I'm not saying never to play earnings, or I'm not telling you to buy Apple because I believe in Apple for the long term, and I believe that this is a great deal, even at this price going forward for the long term. But you got to keep in mind that the stock has ran up a lot. We were just looking at the 180-day chart, and you can see, look, it's very, very oversold. It's very, very strong mover right now. It's testing the $150 area, which we can't break through. Once we break through 150, I can see this easily pushing forward towards 155 and 160 and really staying and holding with this 150 area. But we need a big push by Apple. We need a big push in the NASDAQ to keep on holding a lot of these tech stocks up. And you know what? At the end of the day, you got to ask yourself before hitting the earnings what the stock looks like, okay? So that's the number one key takeaway of this video is what the actual stock looks like. And with Apple, we saw that there was a huge run-up. Even in the few days before, there was a huge run-up. This tech stocks were all on fire, and because of that, Apple, the stock itself, didn't perform even though earnings was a blowout. So hopefully you guys enjoyed this video. Leave a like if you did, subscribe for more content, and I will catch you guys in the next video.